Hi, I'm Al Brooks, and I'm taking this opportunity to discuss something that is, I think, entertaining at the end of the year, and that's looking back at the year and seeing if there were things that happened earlier in the year that will have some effect on how the market will end up on December 31st. I'm basing the principles from the price action trading concepts that I teach in my price action trading course. I want to begin talking about the monthly chart of the Emini, and it's illustrating several points that I've been discussing both on my brookstradingcourse.com website blog and in my trading room at brookspriceaction.com. There are three things about the monthly Emini chart that I think are particularly interesting. First, only 3 times in the past 20 years has the Emini been above the 20-bar exponential moving average for this many bars. So only 3 times in the past 20 years has it gone this long without touching the moving average. Next, the distance, the number of points from the low of a bar to the moving average, it's only been this far above or below the moving average 3 times in the past 20 years. And each of those 3 times, the market had a reversal that averaged about 20%, or went at least 20%. I don't know if the current sell-off will become a 20% correction. My minimum target that I've been talking about since August is a test of the 20-bar exponential moving average, and we're close to it, but we're not quite there. Also, I think something interesting happened this week. We are reversing down from the top of a monthly channel, so you expect the market to at least poke below the bottom of the channel, this red line. It looks like we're there, but in fact we're not quite there. There's still room to the bottom of the channel, and that makes me think we're going lower. Plus, we're getting close to the monthly 20-bar exponential moving average, and we're not quite there yet. So I think the magnetic effect of that moving average is going to pull the market down to it at some point in the next few months. One thing that happened that was interesting this week is we reversed up sharply from the neighborhood of the bottom of the channel, but I think more importantly, we reversed up sharply from the close of December 3rd last year, right? If you look at, this is December of 2013, and that's the close of December of 2013. This week's low dropped a little bit below it and reversed up sharply. So yes, you can say it's reversing up from near the moving average, and you can say it's reversing up from the trend line, but I think more than anything it's reversing up from the close of last year. And why is that? Why would it be reversing up from the close of last year? Because the market is usually up on the year, and by us dropping below the close of last year, there was a chance that the market might be down on the year. In fact, I think that the market has been up 9 of the past years. So the December 31st close has been above the December 31st close of the prior year 9 out of 10 times. And in fact, the market is up most years. However, there are some things that can happen in January that increase or decrease the chances that the year will be positive. I think this chart is really interesting. I've been saving versions of this chart for the end of the year. And it all has to do with statistics, and I think it's entertaining. This is the first day of trading this year, and this is the 1-minute chart, the 5-minute chart, the 60-minute chart, the daily chart, the weekly chart, and the monthly chart. And there's something interesting on all 6 of these charts. And I don't know if you can see it, but if you cannot, you can simply read what it says on the chart. So this is the first minute of trading of 2014, and you can see there's a bear body. So the very first minute of the year traded down, there was a bear body. Here is the first 5-minute bar of 2014, a bear body. Here is the first 60-minute bar of 2014, a bear body. Here is the first day of trading of 2014, a bear body. Here is the first week of trading of 2014, a bear body, a bear candle. And here is the first month of trading in 2014, January, and January was down. I don't have the rest of the year on this chart. This is the March E-mini contract, so it expires in March. But the point I want to make is that on all time frames, the year began with a bear candle for the very first candle of the year, which is interesting. But, you know, obviously if the first hour is down, you know, the first 5 minutes might be down, the first 1 minute might be down. If the first minute is down, increases the chances that the first 5 minutes are down. If the first 5 minutes are down, it increases the chances the first 60 minutes are down. If the first day is down, it increases the chances that the first week is down. If the first week is down, it increases the chances that the first month will be down. In any case, it's unusual. I think it's unusual that on every time frame, the year began with a bearish bar. Now, can January predict what the rest of the year will be like? Does it have any predictive value as to the close of the year compared to the close of the prior year? Well, the stock market is always going up, right? If you just look at the stock market today compared to 10 years ago, 20 years ago, 50 years ago, 100 years ago, it keeps going up because the economy keeps growing. We get more people, we get more businesses, businesses become more profitable. In any case, 67% of all years are up. In other words, the December 31st price, the closing price, is above the closing price of the December 31st of the year before. What happens if January is up? What happens if the close of January is above the close of December 31st? Well, then the odds go up to 82%. So instead of 67% chance that the year will end up, the odds go up to 82%. I'm talking about something different from what I just showed on the charts. I'm talking about not whether or not January has a bear body or a bull body. I'm talking about whether the close of January is above the close of December, the prior December. But it's basically pretty much the same thing. If it's closing above December, it's probably going to have a bull body. If it's closing below December, it's probably going to have a bear body. So what happens if January is down? What happens if the close of January is below the close of December? What are the chances that the year will be up? Well, they drop to 42%. So right now, the chance that this will be an up year, that December's close will be above December's close of last year, currently is about 42%. I'm bringing all this up because I think it's interesting, and I think it will receive a lot of attention in the press over the next month or two, because it does every year. However, I don't think you'll hear anyone talk about the smaller time frame charts the way I did today. And as a trader, I think everything is interesting, and I thought you might think it was interesting as well. Again, I'm Al Brooks, and thank you for your time.